Hi, it's Joe Mazumdar from Exploration Insights, interviewing for the Metal Investment Forum webinar. And today I got Darwin Green, CEO of HighGold Mining. Hi, Darwin.
Hey, Joe. Good to see you.
So HighGold Mining, basically developed around this one project called the JT deposit. And so the interest, I guess that the idea is like you've been working in Alaska for a long time, and this project has been around, but you'd never heard of it.
Yeah, it was actually pretty interesting. It was brought to us. I mean, as you know, HighGold was spun out of a company called Constantine, and myself and the management team there, we have had a long track record in Alaska. I've been up there operating for probably 15 years plus. And it kind of shocked me that I wasn't aware of this property, and it was discovered in the early '80s by a major mining company, Anaconda. They eventually got out of the mining business, and it transferred hands ultimately to a company called Westman, who were a mid-tier producer. They had an operating mine at Stewart, BC, which is about 900 nautical miles to the south, and it was pretty hungry for feed at the time. And they were looking at a direct shipment scenario of actually mining at Johnson, putting it on the ore on a barge and sending it all the way down there to be processed at the Premier Mill. Ultimately, Westman ended up shutting that operation down. This project reverted back to Siri, and
Siri is
Cook Inlet Region Inc. It's one of 12 regional native corporations. So in Alaska, they settled their land claims in the 70s. They created for-profit native corporations, with the shareholders being the indigenous people in the surrounding region. And in that process, they were able to select lands for different purposes, some for real estate, some for timber, some for surface rights, some for mineral rights. This area was selected specifically for its mineral rights. Fantastic partner, very sophisticated group. And they're really kind of the preferred land to develop resources on in Alaska, in that there's real certainty of title, and from a sort of a sustainability standpoint, revenue is being generated from the projects go directly to the local people. So it's a pretty neat deal. Anyhow, it went back to them, and it sat for 25 years without a thing done on the project. Yeah. And not really for any fundamental flaw. I mean, it kind of got handed back when the gold price was low. Siri themselves used to have a really well-established sort of minerals division. That kind of, I guess, withered. They had a lot of oil and gas interests and other interests, so they were certainly not for want of revenue. And then they kind of said, hey, we should do something with this. And they approached us. They're very relationship driven, and here we are.
Right. And so you just put out a new resource. So the previous resource, which is non-43-101 compliant, put it around a 500,000 gold equivalent ounces or thereabouts. That might be a 9-ish gram per ton cutoff. And now you've announced over 700,000 ounces of indicated gold equivalent ounces and another 100 odd ounces of inferred. So what's the big difference between the non-compliant one and your updated one, which is now 43-101 compliant?
Yeah, well, a big part, gold price plays into it, but also I think when Westman were looking at it, that scenario of direct shipping ore had really, really high cost operations. So that meant their cutoff grade, in terms of what they included in their resource, was very high. When we look at our numbers now, it's more or less equivalent to 9 gram per ton gold equivalent cutoff. Well, that cutoff is higher grade than 90% of the operating mines out there right now. So it gives you an idea of how much they left behind. We just didn't know what this looked like at a lower cutoff grade until we did an actual modern block model style resource estimate. And with doing that, and we think we've still used a fairly conservative cutoff grade at 4 grams per ton, there's a whole lot more metal there that hangs together very well. So that's the fundamental difference. It's just dropping that cutoff grade. Certainly higher metal prices help, but we actually just used a gold equivalent cutoff. And that cutoff we're using is common to what you see for much narrower, higher grade underground operations. We have a very thick, wide deposit. So, you could likely get away with lower, but it's Alaska, it's polymetallic. So we thought we didn't need to push the envelope at all. We took a conservative approach with that cutoff.
So I think if memory serves, the indicated resource grade is like about 10 grams gold equivalent, and about 60% of that is gold. Is that right?
Yeah, that's right. It's 10.9 grams gold equivalent. If you want the exact numbers, it's 50% is gold. The remaining 44% is split between 4 other commodities: zinc, copper, lead, and silver, in that order. So the lion's share is the gold. Far and away, it is a gold first deposit, but there's significant base metal credits. And it's kind of interesting. I mean, if you took just the base metal and you stripped out the gold, you'd be really happy with this as a nice regionally high grade base metal deposit. Similarly, if you took the base metal away and you looked at just the gold, you'd be pretty happy. We just happen to have 2 kind of higher grade deposits in one.
So, I mean, I guess it speaks to the thickness and the continuity, which is a big deal with respect to mining. If you're talking about widths of 20 to 30 meters, you're talking about a continuity of mineralization that allows you to have less pierce points that define the mineralization because it sort of hangs together. So, how does an investor look at that kind of a deposit in terms of having a preference potentially for somebody who might want to be looking at taking this out?
Yeah, well, I think in the mining business, well, it doesn't, if you could be making shoes, it's all about margin. Margin is what it's making money, the economics of a project. And people often talk about grade being king, and grade is very important, but sometimes your underground mining costs can be so high that you're still not making that much money. We're in a unique situation where we've got the grade that's more typically associated with a narrow underground mine, but we've got the widths that are associated with much lower grades, just typically more associated with disseminated style gold deposits. So that's the perfect mix, right? You've got the high grade plus wide width equals fantastic margins. Added to that, it's a project that doesn't, because of its grade, you don't need a mill that's, a huge mill and a huge facility, which ultimately usually leads to high capex to build your mine. So this is the kind of project that generally have a fairly small mill, fairly small footprint, but spits out a ton of cash if it goes the distance. So that is kind of like the perfect type of deposit, because you have low capital risk to build and you've got high operating margin. We've got a really good start of one of those deposits, and we've got a couple other good analogs to look to in terms of what this could become. And we're squarely focused on now growing it, making it bigger.
And I guess now you've got the JD deposit, and now you're looking beyond to add more resource on places that Westman and potentially Anaconda didn't look at. Obviously, Westman's focus was on that high grade for direct shipping, and they weren't interested in much else. But your interest right now in terms of exploration going forward is on the continuity of the deposit on either side of what you've outlined, and potentially an offset, a structural offset of it to the north. Is that right?
Yeah, actually, there's a multitude of prospects, and they're all targets, and they're all quite well defined and well developed. Looking at the resource itself, there certainly is areas on the edges, especially as you get deeper, where we see room to add meaningful tons and ounces. So there's room to grow it there. Probably the transformative growth that we can get really, though, comes from some of these other targets, one of which is this offset. We know the deposit trends down. We know it's cut off by a fault. It's cut off clean by a fault. It's late, and it's displaced it. The previous workers did a tremendously good job of figuring out the offset and where it went. They proceeded to drill along, and they have finally picked it up about 500 to 800 meters to the northeast. We have the exact same alteration style of mineralization, but they just kind of got into it and then stopped. Westman loved the exploration upside, but they were very focused. They're a bit hand to mouth with their operation, and Stewart, so they were very focused on the engineering. And so it's just sitting there for us to go follow up. So we know where to go. They hit the exact same type of stuff. And now we got a vector into the core of the system. But on a bigger scale, it's clear that we've pivoted the exploration model just a little bit, and it's less strata bound in our view, and it's more structurally controlled. And we see what was drilled is really just sort of 5 to 10% of the total strike length of a very large alteration footprint. And so we see a lot of room to chase this to the north and to the south in areas that have seen zero drilling historically. Added to that, we made a new footwall discovery at the end of last year. We only had one hole into it. It didn't make it into our resource because we only had the one hole. A little bit of a different character, but it's something brand new. Highlights, without even really trying too hard, we found something new, and really, I think, just hammers home that exploration upside we see here. And then scaling out further, this is a property that we've got 12-kilometer trend of prospects and alteration. Fly, to the next valley over, and got good geochemistry. I've always been an advocate of geochemistry first. Alteration's nice, but if you can go get 20 grams in a silicified zone on surface of gold, that's even better. And so we have that about 4.5 kilometers to the north. It's not seen a drill hole since 1983. There was only a couple put in there before. So we've got lots of things in the pipeline on this property. And that's probably the most compelling part about this, is just that exploration upside immediately around the deposit, but then even further beyond that, the ability to find other sort of satellite deposits, if you will.
Okay, given the upside potential and the constraints potentially about what's happening with COVID-19 pandemic on getting around and doing work in Alaska, are you going to be able to get up there and do this exploration work this season?
Yeah, well, we're quite confident we will. I mean, we've been thinking long and hard on it for quite a while now. We have deferred our start date. We were originally looking at the beginning of June, and now we've pushed that back to the beginning of July. But that won't impact us that materially. We had a very productive season last year with just one drill over the span of 5 weeks, and we intend to have 2 drills going from the start with the potential ability to add more. So lots of scope on the back end. And our confidence, I guess, in being able to work up there is just, well, there is, I know of at least one program right now where there's exploration drilling going on currently. There was sort of shut-in orders that came into place in Alaska originally, but they've got a pretty low caseload right now in terms of COVID, and they certainly, from a government level, are very keen to get whatever parts of the economy going that they can. Alaska in particular is being hit very hard economically due to oil prices,
Right.
Seafood industry, and we're an industry that's pretty isolated. Once you get out there, we're in an isolated camp. We're not going in and out of remote communities. We will obviously have very strict policies on trying to, for monitoring and making sure people don't enter infected, and being very, very careful about people's travel patterns. But really, if we can get to Anchorage, and anyone out of state is probably, as of now, going to have to self-isolate for 2 weeks once they arrive. But once they're there, it's we're in a pretty good situation of being removed from people, and should be able to execute pretty easily.
Right. And so in terms of your work program and that, you did a financing last year's. How are you with respect to working capital to fund this program?
Yeah, no, we're in good shape. So we've got, I don't know, about 11 million working capital right now, Canadian. The initial phase 1 budget that we're looking at here is in sort of the 5 to 6 million range. That'll be sort of a 7,000 meter plus drilling. I'd like to see closer to 10,000, but that's kind of, we're very much looking at this as a phased approach of get in there, hammer all 5 of those near resource targets. I fully expect the market to be in very strong position then for the gold space, maybe not for the rest of the markets. With some success momentum, we can certainly expand on that pretty dramatically. But taking a measured approach of not, of being a little bit responsive to where the markets are going to be then, and that sort of thing. But we've got a solid treasury to execute. We don't need to do a financing, and don't intend to in the immediate term.
All right. Well, thanks, Darwin. Thanks for joining me on the Metals Investment Forum webinar. And it's Joe Mazumdar, Exploration Insights in Vancouver. Thank you very much.
Yeah, great. Thank you, Joe.